Hello everyone, this video we are going to look for blue chip shares. Okay, so what is blue chip shares and why we need to invest for blue chip shares, how we are going to identify what are the benefits as well as drawbacks will be available for this blue chip shares. These are all things we are going to look in this video. As you are a beginner, really it's very helpful for you to identify based on your investment which company you need to invest. Okay, let's see. Okay, first we can look for blue chip shares. What is blue chip shares? So blue chip stocks are shares of very large and well recognized companies with a long history of sound financial performance. Okay, so the blue chip companies, in a sense, blue chip companies, they are introducing for the shares that shares are large and well recognized companies. Okay, not for all companies. So which company will be a large company, how we are telling based on the market capitalization. So what is market capitalization? Based on the outstanding shares which they are issuing to the shareholders into current market price. So based on this market capitalization, we are determining for large company as well as small companies. So this company's history, while you're go through in a sense, it is well performed or else sound financial performance, consistently making for profit. So these kind of companies we call it as blue chip companies, as well as respective shares call it as blue chip shares. Okay, and what is the origin of blue chip? So how this word come from? So the origin come from Oliver Zincold. He is an employee, he belongs to US. Okay, he is an employee, he worked in Dow Jones. What is Dow Jones? It is an index of US. Okay, it is comprises of 30 companies. Normally we call it as Dow Jones Industrial Average. This one is a famous index for US. Okay, in the year 1923 he was sitting in a brokerage firm. Okay, that time he is looking all the stocks, whatever stocks traded, that stock price value will be $200 and $200 and above. Okay, so what are the stocks trading above $200? That respective stock he call it as blue chip. This person used the term, call it as blue chip, and he has written for the theory also. He published in the journals also. So through this respective phrase, this blue chip, okay, this respective phrase come out. But right now we are using this one blue chip in a sense for a well-to-do company, quality company, different terms we are using for this blue chip. But earlier years, how he given for the world in a sense, whichever company share price the above $200, okay, it means costliest shares call it as blue chip. That is the mentality he framed for blue chip. Okay, so this is a way this respective blue chip word come from for the word. And when he was in 80 he died. Okay, after that we have given for different things about blue chip and all those things. Okay, in the earlier era, because of high price of shares call it as blue chip only, but right now we are looking for financial performance also for determining the blue chip. So now you can understand where it is coming from and what is blue chip shares. Okay, and next we will look for how we can identify blue chip companies. The first one, consistent annual revenue over long period. Okay, the revenue should be continuously need to give for long period. It is 10 years you can take it, or 20 years you can take it, or for 30 years you can take it. Consistently they need to produce for the revenue. The first way you can identify for blue chip companies. And for the second way, how we can do it in a sense, based on the important ratios that should be stable. Okay, stable in a sense, what, there is no much fluctuations. Okay, in a normal ratios they need to be maintained. Okay, that is what they are giving. So what are the ratios? The first one will be debt equity ratio. Debt in a sense, so the company is having more debt they are getting from financial institutions or bank. In a sense, there is no much impression for the particular company, right? So if you're getting loan from other person more, and if your asset value will be low, in a sense we cannot consider that respective company as blue chip. So stable debt equity ratio and average return on equity. So what's a return which we are getting from the equity, that should be stable, and interest coverage ratio and price to earning P ratio, that is price to earning ratio. These are all the ratios will be stable while we are comparing with market capitalization. Okay, so if you identify these all those things in a proper way, in a sense, that respective company, we can call it as blue chip companies. So some companies we can say for blue chip companies, that in the long run we cannot say those all companies will be blue chip. Sometimes it will be come down, sometimes it will be goes up. Okay, so if the company consistent for long period holding these things in a proper way, we can call it as blue chip companies. So what are the benefits for investing in blue chip? So if I am holding for particular amount, I want to invest in blue chip, I did not know about other companies, so better I can invest in blue chip companies. So what are the benefits I will get? In a sense, you will get it for regular return. Regular return you will get it in a long term period, not for short term. Okay, in a minimum return only you will get it, not for much return. That's very important, because you know that the volatile is also very low while compared with the blue chip companies with the other companies. And low risk investment, because there is no much volatile because of this stock, so that's the reason it is a low risk investment. And you can achieve for financial goal. It means if you're investing for long term, in a sense, definitely you can get it for the return. And what you're expecting for 10% or 12% or 20% in a long run means for 7 years and 10 years, in a sense, definitely you can achieve for the financial goal if you're investing for these blue chip companies. And consistent growth, yeah, it's available for consistent growth. It means what? A regular growth will be available, regular price appreciation is available. There is no much variation. There should be in 2%, 1%, 0.5%. On daily basis, if you're looking, in a sense, 0.25%. So such kind of growth will be available for these kind of stocks. And this stocks will provide for dividend to the investor. So whatever profit, because they are making for regular return, right? Regular profit they will make it. Through that profit, they will give the dividend to the shareholders. And for the liquidity, whatever stocks, whoever can invest, we need to look for liquidity. What is liquidity? Whenever you are thinking to sell from the market, seller is also available and buyer is also available in a more. That time only you can get back your money easily. You are holding for a stock, you are thinking to sell in the market, but there is no seller is available. What is the use of it? To whom you will sell in your stock? Okay, so liquidity is not available for respective stock. So enough buyer as well as enough seller available in the market, in a sense, respective stock we can call it as liquidity stock. That kind of stock, it's come under blue chip companies. Okay, so if you're investing in that stock, you will get it for liquidity. That is what the means over here. And what is the drawbacks? What is the disadvantages for investing in blue chip companies? In a sense, the growth rate will be slow. That is what I told, 0.02% or sometimes 0.25%. Suddenly it will not get for 10%, 20%, something like that. You will not get it. Okay, if you're taking for MRF, okay, such kind of stocks and all, if you're taking, in the growth rate, you can check it. That company come under blue chip only, the growth rate will be low, but consistently it will grow, right? And they are giving for dividend a lower dividend only. You can take a track record for blue chip companies and what are the dividends they are giving, in a sense, their dividend will be low. And that stock value is also expensive. Yeah, above 1 lakh, right? For MRF above 1 lakh. And if you're considering for UAE, in a sense, for Maastricht Bank, this and all, more than 200 AED, right? So some of the blue chip stocks, so whatever blue chip stocks, if you're looking, in a sense, that stock price and share value will be higher. So these are all the 3 drawbacks will be there. As you want to expect more return within 2 years and 3 years, in a sense, you need to look for technical analysis, and based on the market movement, you're going to invest. If you're looking for high profit in a long run, in a sense, you need to invest for blue chip companies. Okay, I think right now you understood what is blue chip, okay, where it is coming from, this word, and how you can identify particular company coming under blue chip company or not. So today we can say one company is blue chip. Okay, and for after 6 months we cannot say that blue chip. So market will be volatile. We cannot determine what will happen at any time. During a pandemic situation, all the companies will be coming down, even for blue chip companies. So some of the blue chip companies, what will happen? Whatever calamities, changes will be happen, it will not affect that much. It will be affect for 20 or 30%, but not affect for 80 or 90%. So that's the reason people are suggesting to invest in blue chip companies in a long run. As you are a short-term investor, okay, and this is not suitable for you. So the next video we can look for in India as well as for UAE, what are the blue chip companies is available. Okay, I think this video will be helpful to you. If it is helpful, just you can give a thumbs up and you can comment below really it's helpful or not. Okay, and share to your friends really if it is useful. As you are a new user, you can subscribe and follow my channel. Okay, thank you friends, thank you for watching this. Bye.